Vitasta, you can begin.
Yes, sir. So, good evening, everyone. My name is Vitasta Mahata, and I am an associate researcher at Global Alliance for Financial Inclusion, promoted by Global Council for the Promotion of International Trade. Now, I will give a brief about what GAFI is. Uh, GFI is a coalition of organizations focused on accelerating financial inclusion to ensure inclusive and sustained economic growth by promoting multi-stakeholder approaches. It aims to make financial services available, accessible, and affordable for all, improving system performance and attracting new investments. In my role, I have the privilege of gathering insights from interviews with global leaders in the financial inclusion space. These insights are then analyzed and turned into valuable resources to help us all move forward. We are here to explore the exciting and rapidly evolving world of InsurTech, a field that is significantly transforming the insurance industry. Today, we are honored to have with us a distinguished speaker, Dr. P. Nandagopal. He has an exceptional track record of nurturing ventures from startup to leadership stages and driving transformational change in stagnant businesses. He has founded, nurtured, and led three insurance companies in India, gaining deep expertise in life, general, and health insurance domains. He is a passionate about bringing disruptive changes to the insurance landscape, and he has also founded and led three prominent life insurance companies like Birla Sun Life, Reliance Nippon Life, and India First Life. He served as a CEO for 10 years prior to founding Insurance in Box, and is also the founder and CEO of Upshot. So now I request to please join me in welcoming Sir as he shares his invaluable insights and experiences with us today. Thank you.
Hi. Should I start now?
Yes, sir. Yes, sir. Sure.
Good evening, everybody. I hope you are able to hear me.
Yes, sir. You're audible, sir.
Yeah, great. I think today is an interesting topic. I mean, it's a blend of insurance and technology. The first one is rather a boring subject. I don't think, I mean, especially for the underlaw, I mean, the insurance is an interesting subject, but technology is definitely is. But how does, I mean, the blend of insurance and technology actually work? And what are the kind of challenges which we see as this particular space is evolving? And how do we actually leverage technology to make insurance better is actually the topic of the day. And I thank you, everyone. I mean, thanks the organizers and thank the participants for giving this chance to me to present our case. Let me just start with the preamble first. Having spent several years in the financial services, not just in the insurance industry, but as well, I mean, in the banking and mutual funds and investment banking, I always, had this fundamental problem in understanding what's the major difference between insurance and other financial services. Other financial services are much more active, engaging. For example, I mean, you always watch what's happening to the stock market. You will see what's happening to your net asset values of mutual funds and banking transactions almost every day you do through UPI and all that. But does that happen to your insurance? Do you engage with your insurance in the same way every day? No, it doesn't happen. Why it doesn't happen is there is a fundamental difference in the product offering actually. The product of insurance is not an instant gratification product. That means you will get nothing. I mean, after you make the payment, I mean, unlike in any other financial services products, I mean, you buy a loan, you'll get the money into your bank account. You buy stocks, I mean, you get stocks into your demat account. But when you buy a policy, you get nothing. I mean, except a document. So that means nothing to you unless the moment of truth arrives. And that moment of truth is unfortunate event of a claim. And in such kind of a situations, of course, obviously, the full importance of the insurance will actually, you'll realize. But until then, insurance is not necessarily a very high-touch business. So in that kind of a situation, when you really do not see much of an engagement with an insurance between the insurance and the policyholders, what happens is that it is possible that except at the time of policy sale or maybe an renewal, you hardly think of insurance. When you hardly think of insurance, it is possible again that people will drop off. That's where policies won't get renewed and all. That's why the insurance industry has created a huge mammoth network of agents and people who go to the customer houses, talk to them, and then try to renew the policies. They do need analysis, they do some sort of a financial plan. So they will add that kind of a human touch to the person to compensate for the lack of engagement on the part of the insurance companies. And this important thing which you need to understand, if digital technology is trying to remove that particular human touch and say that you no longer require agents, you no longer require any kind of personal touch, and everything else is available online, you can go and check what's the premium policies and their benefits and all that. Suddenly, it becomes very, very impersonal. And with the lack of engagement and lack of personal touch, the insurance product as it is, I believe that there is a danger of, it's becoming even less impersonalized and all that unless the insurance technology finds an answer. And that answer, what is that answer? The insurance technology has to find the answer for the insurance industry is the focus of my particular discussion today. I think, the fundamental problem with the insurance as on date is that we capture data only selectively. You capture data of what the customer is giving it to during the sales process through the application form. Maybe you will also ask for some kind of an additional information about his income and about his KYC details and all that. So you will have some idea, but you don't really capture all the data into a single data lake, and it really doesn't happen that the front end systems and the back end systems do not talk to each other. Imagine that just now I have mentioned that insurance companies have created the personal touch through their sales force, and the sales force systems are only maybe some sort of a mobile interface or maybe some laptop, and they are capturing the customer interface data. Maybe the customer is angry today, he's canceled the appointment. Some sort of a data is resident at the Salesforce side, but it is not getting translated to the backend, because the backend systems and the front end systems, there is a huge chain of work, and that creates a certain kind of disconnect, and it actually breaks in the data flow. And because of that, the insure technology is only trying to only focus on the policy sale, but does not really help anything later on in engagement of the customer. With this, I think we have one fundamental problem, which I defined, that lack of engagement creates a certain amount of divide between the insurance company and the policyholder. In normal world, the agent, a salesperson may create that kind of a bridge between the insurance company and the policyholder. But in a digital world, that doesn't happen. So how do we actually handle that particular problem to help the insurance companies penetrate deeper? Because at the end of the day, the insurance may be the most important financial product as compared to anything else. While its instant gratification is not there, but in a moment of truth, where the worst case scenario happened to the family, nobody is going to give money to the person in his worst case scenario except the insurance company. So the insurance company comes to you in case of a financial insecurity, in case of death, disease, or some sort of an accident. So if for that particular thing to actually have as a safety net, you want to have it, you must have a penetration which is beyond what is happening today. In the next few slides, I'll talk to you about the kind of penetration, what we are having, even so-called digitization of insurance in the last 10, 20 years. You will see, but the problem is because the technology is fragmented between front-end systems and back-end systems, and front-end systems are further divided into web aggregating systems, CRMs, channel management, and all. And back-end are underwriting, policy administration systems and all that, and they don't really necessarily talk to each other always. So you will have a disconnected customer journey. This is the problem. So this particular problem also creates a huge overall operating cost. Most of you perhaps know that the insurance companies take a lot of time to break even. They need a lot of capital. But if they actually analyze closely, is it always true? Should it be that way only? Do you think, the insurance companies cannot really break even in less than 7 years or 10 years? Why? I think I myself have challenged that idea in my previous various career opportunities. And I've seen that, the most of the cost of insurance, most of the operating costs go towards, one is towards customer acquisition. Second one is managing those army of the salespeople, the branch officers and all that. But if you use technology properly, it is possible that you can actually reduce the cost of insurance substantially and increase your penetration, which is currently at 3.2%. So if you move away from the fragmented older technology, there are case studies to prove that your operating costs will come down by 30%. That means your overall insurance policies, hypothetically speaking, can come down by 30%, which will actually enhance the attractiveness of the product and also speed of delivery, and all those user experience factors will help you to penetrate. But how can you solve that problem with the current system? For that, my simple take on this, after studying the whole thing for a pretty long time and working in the industry and now working in the technology side, unless you have a unified digital platform, that unified digital platform defines the entire customer journey into one single, path. Of customer is paying the premium, is a paying, and customer is claiming money, that's a claim payout. So pay-in and payout into one single journey, if it happens, for which everything else has to be aligned to that. It's not necessary that you'll have at the back end several systems. If you can do that one unified journey and everything comes into one data lake and you run your algorithms on that particular data lake, that's where you have an opportunity to really create a much more engaging journey with the customer through the digital systems, even if you do not have manual intervention there. This is the thing which I spoke to you some time back about low penetration. All of you know that the insurance industry has been privatized in this country for nearly almost 24 years, 25 years, 2001, maybe 23 years. So 23 years onwards, it's about 1.7 or so at the time of liberalization. Now it's about 3.8% in India. And this penetration compares poorly with the best penetrations which you have it in the world. Average is about 7% of the world. And the countries like Japan and in US, the penetration is much more higher. That shows that the development index is directly correlated to the penetration of insurance. As India is now claiming, or maybe on the path of becoming one of the largest economies in the world, maybe third, fourth, or fifth economies in the world, we must become a very highly insured industry so that the social security, the financial security gets penetrated to everybody else. So the downside risk of, something happening, unfortunate event happen, covers. But for that, what kind of role technology has to play? Will the legacy systems be able to solve the puzzle, or the new age systems will be able to do that? Is an answer which we need to find out. Again, this is one more example of how technology has changed our lives. If you look at internet, it's about 47% of business. Everybody else, including the rural, thanks to geo and low-cost internet operators, then we have about nearly 50% of the people are now having internet penetration. Mobile penetration is even more higher than internet penetration. And if you're looking at the thing that most of the people are accessing internet through the mobile browsers, not necessarily through Wi-Fi. That means the penetration is almost 81%. As compared to that, our penetration in the insurance is so poor. And if you think that, travel services, food delivery, transport, everything has piggybacked on the mobile revolution and their penetration has increased, why can't insurance actually do that? And then we will have a totally different situation. Maybe perhaps, our penetration will be the best in the country. But for that, we'll have to see the systems which are currently lagging behind. In spite of the insurance industry being one of the oldest in the financial services, our technology systems haven't really progressed well. That is the thing which we need to address. This slide again talks about, while the negative side is our penetration is lower, but on the positive side, people are already started thinking very deeply about the digital technologies helping you in the insurance side. Most of the people today, they do not buy policies just by listening to the agent. They'll buy after they do online search. 71% actually do online search. They also buy, they're ready to download various kinds of apps. They're ready to attach, give information. And they're also ready to share the lifestyle data. One of the biggest problems which people have, it is on the digital side and internet. I don't want to share. And unless the data is available digitally, the insurance companies will not be able to underwrite people properly. But people are ready to share if they know that by sharing the data, they are in a position to actually get a better deal at a much lower premium or a better coverage. So this is all the global research which actually says, yes, people are ready. If people are ready, is the insurance company in the insurance industry is ready? Is the question which we need to answer right now. So what are the three benefits in case suppose we move from the legacy systems and we move from the old manual way of working, fragmented way of working to a completely modern new age in a unified insurance system? What are the kind of benefits which people would like to ask that we will get it? Of course, everywhere, where you have seen that the digitization has taken deep roots, you have seen that the expenses have come down. In case of airlines, you have seen that the low-cost airlines have really started offering much, much cheaper fares. And so is the case with, maybe food delivery, everything else, which is not completely digitized. The most important example may be the UPA. Previously, if you had to do money transfer, you have to take a demand draft, and there's a 1% or something like charge on the value of money transfer, which you do through the demand draft. Now that happens through the UPA, and there is absolutely zero expenses on that. Like that, the expenses will come down, and that cost, when it comes down, the insurance companies will be forced to pass on the cost back to the customers. Our study reveals that we have done an experiment and we actually showcase this particular data to the regulatory agencies. Since either 30% of the premiums can actually come down. And this is a smaller experiment, and maybe it can even further be improved, and maybe 50% of that expenses can also be saved. And not only that, the sales will increase, the penetration will increase by 2x. Today, the penetration is about 3.2%, and actually go up to 6 or 7 to catch up with the global average. And more important than the number of sales and expenses, the customer delight. Today, most of the people have got bad experiences in India. At least in case of claims, maybe some of the claims are rejected, some of the claims there were a lot of follow-up, some claims get delayed indefinitely and you don't know really what's happening. And because of that, there's a lot of disenchantment of the customers with the insurance industry. But that delayed factor can improve if you use the modern technology. So these are the three benefits which will derive if you move into complete digital space. So how does how should that particular technology should look like to get you those three benefits to improve the penetration? What kind of insurance technology we should have it? So here I would like to say is all, standard policies. At a time when you use completely, you have unified platforms to capture all the data, and the data really comes into it. Like today, what happens if you are buying something from Amazon, Amazon immediately will recognize that you are buying this product. You bought an Apple phone, maybe you have a need for some headphones, earphones, and that kind of a thing. Immediately it recognizes. Like that, the insurance companies can use and give much more personalized expenses today, which is not possible. And the second important thing is today insurance covers are all, addressed to a specific security need of the customers. So there is a motor insurance policy, there is a home insurance policy, there is a health insurance policy, there is a life insurance and all that. But suppose, you use technology in a different way. Is it possible to cover whatever you own, whatever you have, whatever your lifetime risks, maybe the disease, the disability, a dismemberment, a death, of these are lifetime risks which will have it as compared to your property and casualty risks, maybe indemnity, risk, and maybe you have accidental risks and all that for your property, car, and all of them can be combined into one single policy and offer it to you, saying that okay, so you already have, I mean, this kind of a property and this kind of a lifestyle. So everything is covered under one umbrella policy. Today, it may not be possible because of regulatory reasons. A lot of people say no, but the thing is, regulators never really put any brakes on innovation. It is the insurance company which has to really think, because the insurance company cannot do it. Even if the IRDA gives you the permission right now, go and insure everything under one single umbrella policy. Insurance companies cannot do that because the systems don't support. The systems are not unified. You have complete division between life insurance systems and property and casualty, and there is no commonality between that. But is that really true in case of nature of business? No, nature of business is not necessarily the same. What all the questions which you ask in case of life insurance are more or less similar to the kind of questions which you ask in case of health insurance. So why don't you combine that and say that, okay, lifetime health plan? And what are the policies, questions which will ask about driver safety, behavior kind of a thing for your motor car insurance may have some relevance in your accidental insurance and may have some relevance in life insurance. So you can always combine these data points and develop a much more holistic thing. And other important point is there are three important capital I would like to say. One is e-commerce. All the insurance companies have now understood the power of e-commerce. So e-commerce is happening in the insurance side. That means that you have web aggregated sites like Policybazaar and all that. They will sell policies just like Amazon sells you various goods. So e-commerce is happening. So one E is taken care of. What about the second E? The second E is the engagement. The engagement is which I just now talked in the preamble side, where you need to be in touch with the customer, not just at the time of policy, but the time of claim. But how will you engage with the customer throughout, I mean, his policy period when you don't have Salesforce and all that branches, which is very expensive. So you can do it digitally through apps which can give you lifestyle recommendations and all that. So engagement is the second important thing. But the third most important is the ecosystem connect. A time has come where insurance companies and industries should not think of only this is my narrow framework in which I'm really concerned about customer only at the time of claim. No. If we can connect with everything in the ecosystem, like a health insurance plan should cover not just with hospitals with PPI, but it should cover every ecosystem of the health, like pharmacies, wellness spas, or maybe gym and everything else. If it's covered, then through that, if you can get data, imagine the kind of health insurance premiums that can get finely tuned. So this kind of a thing is possible in future. And such kind of a thing will actually make the policy benefits much more efficient and tangible. Today, it's very intangible, but today, tomorrow, if you have a health insurance plan from XYZ company and you go to gym for a regular workout, suddenly the gym instructor says that, okay, now that you got a policy, now if you do it 30 minutes every day, then your policy premium will get come down by 20% next renewal. That's the tangible benefit. Otherwise, the gym person will actually give you discount on that because you have a health insurance policy. We know that when you're taking care of your health, and then gym will actually like to add to your wellness, and I'm going to give you a membership another 20% discount. And this kind of things can actually happen when you have ecosystem connect to the systems. So having said that now, I mean, I just want to maybe pause because there should be some time for question and answers also. But I wanted to just highlight some 5 steps that should be taken by the insurance industry to be a future-ready InsurTech system. First and foremost, which I kept on saying that is everybody should have one single view. So you should have an integrated platform. Imagine that you are actually Amazon or Google or Facebook. I mean, the behind the technology, is it one single unified, completely organically integrated microservices, event-driven technology, or is it something disparate systems which are put together through APIs? No, it is not a system which actually put together through APIs between one function and another function. It is one organical system, of course, modular and based on microservices, event-driven. So insurance companies have to have that as the first important thing. Second thing is everything is real time. People are talking about, you can issue policy in 30 minutes, and 30 minutes is not real time. You press the button, within the next 30 seconds, your airline ticket comes and your insurance policy should come. Maybe that is still possible right now, But can you also do the same thing when your claim is payable? When people are asking now today, IID is saying that 3 hours is the minimum time. I mean, but three hours is the maximum time. 3 hours is also too long. Can you have instant claims? So everything happens in real time. That is very possible if you have right kind of technology. And the third one is over a period of time, you should not believe that only the manual underwriters, manual claim managers are the best judges to understand and assess your risk. That is not necessarily true. Because AI has proved that every time when you challenge, you have a combat with the machines can actually outperform than the normal average human beings employees in the industry. It is possible that some of the other decisions can be still personalized, but then you should really look at AI to completely digitize and move from a manual to an automated system. And after that, the other important thing is if you have to employ an army of technology people, though it is, of course, employment generating opportunity, that is not necessarily solving the problem because an operating cost which you are saving on one side are now going to be spent on the technology. So everything should be, to the extent possible, should be low code, no code. So that normal people who are working in the insurance industry, who is not technology people, should be able to really set up the system. Like you don't really need a technology thing if you want to download the app for Zoom or maybe for Teams. You don't really know it. You just download it and do that. And that's how it should be in the entire insurance technology space also. And last and other fifth step is, as I mentioned to you, you need to add a lot of value-added services from the ecosystem. A time will come now. Today, if you really go and watch a movie in the PVR, automatically popcorn comes and say that, okay, you are buying the ticket. So would you like to add popcorn or Coke? They don't really manufacture those two things. PVR is not in the business of selling popcorn, but that is a value-added service. People like to enjoy that. So insurance companies should think that if I have the large data, if I understand customer lifestyles and all, I should be allowed to add whatever value-added services that will come and make a package so that it will become a nice ecosystem connect. And this is possible when you have a right kind of technology. So again, the last few points. As I mentioned to you, from a technical point of view, it should be microservices architecture, and it is not necessarily, a huge monolithic system, in which case it becomes very difficult. You should have microservices so that you can actually add, delete any small change which you want to do that. And the tech stack should be future ready. Most of the insurance companies today are thinking of, solving the current problems. Problems like lapsation, problems like frauds in the claims, or problems like issuing policies in real time, and all that problems of current times. But in future, it is something even more dramatically different. So you have to choose a technology which is future ready, not just only solving the problems for the current situation. Then other thing is, what I believe is happening is should happen for your technology model is, over a period of time, everything what happens in an insurance company will eventually move to the technical side, will get enabled, empowered, or replaced by technology. In that case, maybe a situation will come, you don't need actuaries, you don't need underwriters, you don't need claim managers, you don't even need sales force people. Everything will be technical team. So this is a frightening situation maybe, but the fact is that, if you are today talking to the Swiggy or today talking to the Uber and all that, are they really food delivery and then taxi companies? No, they're technology companies. Like Policy Bazaar is called InsurTech. It's not called insurance broker. So that the insurance companies will very soon be called InsurTech companies, or maybe just technology companies. Everybody else has to learn. If the CEO doesn't learn that and he doesn't understand, doesn't deploy, then of course it will become a challenge. And the other important point is, of course, that it's already happening that everybody is moving to the cloud now, and that is not necessarily a challenge any longer. Regulations permit you to have the systems on your cloud, but also I believe that code should be open source. If as much code that is possible, if it is open source, and then everything else is user friendly, then the technology itself will also become cheaper. So these are the kind of salient features which a person should look at the right technology model. Is it microservices based? Is it available open source so that you don't have to pay for the license? Is it cloud hosted? Is it something that is actually focusing not on the present problems but on the future? So, coming back to the another slide, of course, what we should say is eventually everything should get personalized. Products, pricing, your campaigns, everything should get personalized as compared to your current situation. And everything else also should be automated to the extent that you'll have a real-time view. And customer engagement should be very active. And all these kind of things can also move not just only at the time of policy sale, because that is something that everybody is interested, but what happens in case of claim? Claim is the time when a customer really experiences how efficient the systems are. So if you have AI-powered real-time claims control and insta payouts, that's the time we can say that yes, insurance company has arrived into the digital age. The advantages are very obvious, as I mentioned, that insurance companies today take almost 7 months to 1 year to launch a plan after they get the license. That is not necessary if you use a low code. Everything can happen super fast. Amazon introduces products maybe in minutes, like that insurance companies can also do that. Everything will become flexible. It is not that say that my policy conditions are like this, and then you have to really pay the premium. Need not be that way. You can actually pick and choose benefits, and then your premium can change. Costs will come down dramatically. And as I mentioned to you, from e-commerce to the ecosystem, the journey will happen. Today, we are at the e-commerce stage, and in between e-commerce and ecosystem, there's an engagement. But after that, the complete ecosystem thing will happen. This, if it actually happens, this is the advantage of the newest technology. This is the last slide. I don't want to really take too much of a time. If you look at, things, what has exactly happened over a period of time, in the insurance technology side, it's a very older industry. Some of you may know that, it's the oldest industry next to banking in the financial services. The last so many years, the insurance companies focused only on core systems, core policy administration. That means you need to have some sort of a record keeping of who's buying policies and who's actually paying premium. That is the story even now today for most of the companies. Then somewhere in the last 10 years, slowly people started looking at the front end systems. Like you have CRMs and you have call center dialers, you have systems which are really capturing the customer conversations in the front end. That is the second thing that has happened. Then, of course, the mobile phones have entered. When the mobile phones entered, the whole app world has become completely attractive. So a lot of insurance companies have started having their own apps, maybe their aggregator apps like Policy Bazaar and all that. So mobile apps have created as something, very different situation. Now, after that, the work from home is another important event. And that other work from home suddenly has given a serious boost to the insurance technology, because people started realizing that you don't have to be in the office to issue a policy. You don't have to be in the office to settle a claim. So you can actually access your systems from the home. For that, your systems have to be cloud hosted. Your systems, there should be security firewalls and all that kind of thing. So this is an important thing that has happened. And added to that, of course, the real major problem is a major opportunity or challenge or problem, whichever the thing which you talk about, is the introduction of entry of artificial intelligence. This is going to change everything that we have seen in the insurance industry. It will replace most of the manual work. If today you visit any large insurance company head office anywhere in the world, you will see still an army of the people working on underwriting, claims, and all that. Unfortunately, all these people will lose jobs. Unfortunately, I say that because this is going to create a tremendous disruption in the market, but there is nothing that we can actually do. You'll have to create employment maybe in other avenues, but all the low-end jobs will actually go. Most of the time, these things will be done by AI, ML-driven algorithms, and that is the way we all have to prepare ourselves. The next important thing that likely to happen in the up to 2005, 2025 to 30, is that insurance no longer will be sold as a standalone thing. It will be embedded into every product offering. You make a delivery, you make a food order through Swiggy, health insurance gets embedded into that. You make a trip payment through Uber, your personal accident insurance will be embedded into that. You buy a credit card, your credit life insurance will be embedded into that. So everything gets embedded, and all those embedded insurances will get interconnected. And that is how, I mean, perhaps you will see a situation where the insurance is no longer something that, you need to have as standard policies and all that. Like today, nobody is buying cameras. Cameras are all embedded into your mobile phone. Nobody is buying digital watches. They're all there. Calculators are all there embedded into your mobile phone. So like that, insurance also will get embedded into the lifestyle products what you have. Maybe if you have a DTH connection, TV connection, utility bill payments, all these things are the process in which insurance can get embedded, provided your systems can support. With that, I mean, you will see a completely different world of insurance, completely unrecognizable world of insurance, maybe in 10 years. This is the kind of, I mean, situation we are likely to face. Whether it is good, bad, I mean, it is definitely good for the customer, because customers' fundamental issues of lack of delight and high cost of insurance, low penetration will be done. But yes, for the overall economy, the employment may actually see a much bigger dip now. Then maybe we'll have to think of situations how to really overcome those challenges of unemployment for the people at a lower level of skill set. So with this, I mean, I just would like to conclude the important points which I try to say is insurance is the most important, most critical product in the financial services basket. But unfortunately, it is not easily accessible. It's not affordable for many. And to make it also much more engaging and affordable, there is a big opportunity for the insurance companies to move towards a world-class technology. And world-class technology need not come from the world-class big organizations like, Infosys, Oracle, TCS. They can come from the startups also. There is world-class technology for delivery, food delivery, and then traffic management, and then taxi services all have come from startups. And so here also an opportunity is there to change everything into a completely modern situation where it is good for the industry, for the economy in the end. Ultimately, nobody can stop, I mean, the onslaught of technology. It'll all change our lives. Insurance may be the last one in the financial services, but it'll get completely digitized. So these are my thoughts. All these thoughts are based on my long career in the insurance industry, in my experiments in the technology side. So I'll be happy to take any questions, whatever you have. Thank you very much for giving the chance to talk to you.
Yes, sir. So I have few questions for you. So, so my first question to you is like, how will InsurTech adapt to new and evolving risks like cyber threats, like climate change or political instability? Like, what do you think on this?
So you've given, I mean, all the three. I'll talk about, I mean, cyber threats, because politics and climate are not, climate is, of course, insurable risk anyway. So I'll talk about this too. Political instability is not my cup of tea. Cyber risk is not something that is very unique only to insurance. It is predominant in everything what you do. While we are talking, there is no guarantee that somebody is not hacking your system and maybe capturing some data of what we are doing, and maybe your picture, my picture may be there in the dark net and nobody knows. Even Zoom perhaps is though it is a very, very safe app, but there is 100% guarantee nowhere it is available. But if you look at on the flip side, even in the physical world also, there is no 100% guarantee. If you keep all your savings, I mean, let's say in your strong room, say safety box or whatever you have it, cash box at home, and then you will go on a vacation, there's no guarantee that will not be stolen. Somebody can always penetrate. If they have the resources, they can always penetrate. Because they can penetrate, there is a risk. What is the answer? The answer is very simple: insurance. So take an insurance for cybersecurity problem also. That's the only thing, because you cannot avoid risks. You can only mitigate, you can transfer. That's why the instrument of insurance is also covering cyber risks. The second one, climate change, which you talked about, it's a very, very critical problem. Today is climate change, because it is impacting such a large population and the risk is so high. Like, suddenly you have, forest fires engulfing the homes, and you have floods coming up into unknown places. Like Chennai, for example, is never known for the floods, and suddenly you have floods everywhere. And this Dubai, you had floods, and then millions of, cars got impacted and all that. So this kind of a thing is not necessarily traditionally insurable risk. But if you use a digital technology, your forecasting can become much more sharper. That means, I mean, your weather forecasting, some kind of a preventive steps you may be able to do, maybe slightly in advance, so that the persons will have an opportunity to cover themselves. And the second thing is also you need to have a different kind of an insurance, not just a private profit motive insurance, but you need to have some public participation, some kind of a crowdfunding, which is also a form of insurance that can actually handle maybe this climate change. But climate change is real, and insurance can only add a very small bit to that. A lot of that risk can be handled by ourselves if you really know how we are actually contributing to that kind of a risk, and then reduce it at least for the future generations so they'll have an opportunity to live.
So my next question is like, how will InsurTech cater to the needs of the increasingly freelance workforce with flexible and tailored insurance solutions?
I think that's very easy because it really doesn't matter whether the person is having a fixed job or is actually a gig worker or is a flexi time employee and all that. As long as he has got a certain kind of lifestyle that requires to be insured, a certain kind of income that supports the premium payment, it is possible to insure. In fact, most of the people very soon will not have fixed jobs. As I mentioned to you in my forecast and all that, they'll all have maybe flexi jobs. Somebody may be doing 3 or 4 different kinds of jobs. He'll have something in the morning, something in the afternoon, something in the night, and that kind of a thing will happen. So he will not have one single source of income. So this is the reality. If that is your customer base, the insurance companies obviously will develop policies for them. It is no big deal even for them. But yes, some kind of a modification has to happen. Your regular EMI kind of a plans may not work, because suddenly if there is a low income because of demand is less for that particular gig worker, he will not be able to pay premium for that. So you need to have flexi pay situations. You need to have more, personalized solutions for that, which are possible if you use a new age technology.
Sir, how can blockchain technology enhance transparency, security, and efficiency in insurance processes?
Well, I mean, I'm not really an expert in blockchain, but somehow, I mean, I think that, this topic of blockchain is a little bit overblown in the sense that, insurance is a very mediated business from an intelligence point of view. It is not a very serious, difficult business where you have to use blockchain and other kind of things. What all you need to do is a simple record keeping. I don't think, you need to have blockchain where like for somebody is saying that, for claims management, it will work. Not necessary. Because so far blockchain hasn't really established its use case even in much more critical functions. Insurance is a very simple thing. So I do not see much of a relevance or application of blockchain in the insurance industry in the near future. But I may be wrong. I'm not an expert on that field.
So, and how will InsurTech integrate seamlessly with other industries like retail and travel, like to offer customized insurance solutions?
Yeah, that's my theme of topic today. As you have seen that, I always talk about ecosystem. So the problem is, it's like, when you are alone in a society, you are not talking to your neighbors and you take care of yourself very well, but you don't talk to your neighbors. You may not get the benefit of the social ecosystem around you as a person I'm talking about. Similarly, as an industry, if the insurance is only in a silo that my customers, my premium, my claims, I will only do this part of it, but I will not know I will not even bother what is happening to the rest of the financial services. I will not even bother what's happening to the rest of the retail services or other drivers of their business. For example, why people buy life insurance? Most of the people buy life insurance for retirement savings, or maybe they'll buy life insurance to provide for the children's education. So do you think the insurance companies have got an automatic connect with the educational system in this country to understand that cost of education is going up like this? And if you have a policy of, let's say, ICICI Prudential, then automatically you'll get 10% discount from Bombay Scottish School. Something like, do you have, that is an ecosystem connect. And that kind of ecosystem connect should happen, must happen, and will happen. And the only block for that, why it is not happening, is not because people are not innovative. I can give credit that insurance business leaders are as as much driven by the need for innovation as anybody else in the retail sector. But the systems, the legacy systems, is the biggest problem. So time has come that you have to understand what is that really holding you back. It is not the regulations. It is not the demand for the customers. It is not your lack of innovative spirit. It is only the insurance technology systems. The moment you remove that and make them more digital and you freely share data. For example, we are working on a model in one country where we are tied up with a utility services provider from where we can pick up the data of the consumption of the electricity, water, and all that, and we'll be able to generate much more reasonable data with, of course, with all the privacy safeguards in place. And that is the kind of a thing where we can actually do it. You will see that merger, that fusion, everything that will happen.
Yes, sir. So my last question is, will we see more collaboration between insurtech startups and traditional insurers, or will competition intensify?
See, competition is a reality. Competition is not only there between big or technology companies, small startups. Competition is also there between the big IT companies and between the startups also. Competition is a reality, but every time something that happens that is hurting your business because of competition, the normal logical response that comes is, okay, how do I actually get better? There are two ways of getting better. You get better through organic growth, through trying to do everything. Not many people will have the same resources. Another smart way of doing it is through collaborations. So I believe that most of the people will look at collaborations. For example, if you look at Paytm story, when Paytm was in the nascent stage, Paytm collaborated with Uber, and Uber actually used Paytm wallet, and that's the collaboration which actually given the entire fillip to the payment industry. Then, like that, Phone Pay with your Flipkart and all that. So you will always have collaborations coming there, and the collaborations, if they are mutually beneficial but not really eating into each other's business, that is a matter of business ethics and the matter of legal compliance and all that. That is definitely sustainable. Otherwise, they'll break off and then they'll look for, just like marriages will work, some marriages will work, some marriages may not work. So you have to look at your partners from the point of compatibility, from the point of ethics, from the point of, more importantly, win-win situation. Is win-win for both, or is only one party wins? That the moment that's held, collaborations will become a reality.
Thank you, sir. Thank you so much. It was a valuable session on InsurTech. As today we covered a lot of things. We covered how online searches and purchases have changed insurance in accessibility. We have seen how InsurTech reduces costs, doubles sales, and improves user satisfaction. Looking to the future, technologies like AI, blockchain, and IoT will drive further transformation. Uh, Thank you, sir. Thank you for your attention. We hope that together we can shape a more informative, a more innovative, and customer-centric future for InsurTech, for insurance.
Thank you very much. I really appreciate the opportunity given to me. I thank you and the organizers, everyone, and the participants. Thank you very much. And let's all hope for the better society. Like you correctly mentioned, it is not just only about insurance, it's also about climate change. It's also about political stability. It's also about, general violence in the society. So all these things, to certain extent, in a very small way, the insurance companies can handle. But once you understand that the financial security is part of your lifestyle, then maybe as a persons will become better. And if each person becomes better, as a society will become better. If societies become better, the world will become better. So let's hope for that kind of a world. Thank you very much for giving the chance to
Thank
talk
you
to
so
you.
much, sir.
Bye.
Thank you. Bye, sir.
Bye.
Thank you.